Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Maloo. We have relatively lower volumes in today's trading session because there's a public holiday in most parts of Maharashtra, and also the US markets overnight are going to be shut, so maybe that's one of the factors that's playing out. But Mangalam, let's get straight to the first management we have on the show.
Let's do that. We went within 20 points of a fresh record high on the Nifty. Let's see where we do that. But the stock on our radar is NHPC. Reported a muted third quarter impacted by some seasonal challenges, which included flash floods. But the company has also gone ahead and laid the foundation stone of a 300 megawatt grid-connected solar PV project in Rajasthan for nearly 1,700 crore rupees worth of investment. We have with us Mr. Goyal, who is the Director of Finance at NHPC, to join in, discuss not only the quarter gone by, but also the future plans of the company. Thanks a lot, Mr. Goyal, for joining in. You know, last time you joined us, you gave us tall targets of capacity building, the kind of revenues that the company would, do, and also increase in regulated equity. I just wanted to start off things first with the foundation stone that you've laid of a solar PV project in Rajasthan. This entails an investment of 1,700 crores. Is this your first solar foray? What are your plans for solar here? And have you signed a PPA already for this?
Thank you for giving this opportunity to me. We have already commissioned one solar project of 50 megawatt in Tamil Nadu, and this will be the second solar project on our balance sheet. Its capacity is 300 megawatt, and we have already signed PPA for whole of the capacity. This project is part of our 1,000 megawatt CPC scheme projects. So this project is likely to be commissioned by September 24.
And what does this do to your revenue and EBITDA, both this and the earlier solar project that you have? And what are your long-term targets for solar?
Our long-term target for solar is not much, because we are basically a hydro company. We are keeping our capex in the range of 80-20, 80 for say hydro and 20% for solar and wind projects. So we are working on 1,200 megawatt solar projects as of now, and our future plans are also in the same range. But in addition to doing solar projects on our balance sheet, we are acting as intermediary procurer also. In that model, the capex is not from our side, but we will be earning 7 paisa per kilowatt in that model.
Got it. All right. Good to speak to you, sir. Thanks so much for joining in. This is Nigel on this side. Well, I wanted to ask you a couple of other questions. The regulated equity, you were talking about 22,600, if I remember correctly, by FY25. Is that a target?
Yes, it is on target, but full year benefit of 22,600 crore regulated equity will be available in FY25-26, because our one of the biggest hydro project, that is Subansiri, will be fully commissioned by May 25. So full year benefit will be available 25-26. But in 24-25 we are commissioning 2 units of this project, two units of this project, and 800 megawatt our Parthi 2 project, and 120 megawatt Rangit 4 project. So our
Go ahead.
Our regulatory equity by end of FY25 will be 16,000 plus crore, and by end of FY26 it will be 22,600.
Okay, so by FY26 it will be 22,600 now, right?
Yes.
Got it. And by 25 it will be 16,000 crores.
Yes.
Okay, all right. Just a quick question. You mentioned Parvati 2 as well as Subanshi Loa, that's a 2,000 megawatt. By when both of these two get commissioned?
Parvati 2 is likely to be commissioned by October 24 for 800 megawatt capacity. 2 units of Subansiri is likely to be commissioned in April-May 25, and thereafter one by one all the 8 units will be commissioned by May 25.
So because of this delay that you've seen in both Subansiri and Parvati, will there be any cost overruns, Mr. Goyal? I mean, will you have to spend a little more because of this delay? If yes, how much?
Yes, cost overrun is there. Our Subansiri is costing around 23,000 crore, and Parvati 2 is costing around 12,000 crore. But since the reasons for delay are beyond the control of the management, and as per CRC regulations, whole of the cost is passed through, and that will be capitalized, and it will be earning return on equity at the rate of 16.5% as per present regulations. But as per new regulation, it will these two projects will earn 17% ROE.
Okay, all right. I wanted to ask you about the PSPs that you have an MOU with Maharashtra government, right? Could you
Yes.
give us further details on that? What is the project cost of each of these projects? What is the construction time and the tariff as well?
We have been allocated 20,000 megawatt capacity in PSP spare, and we are working on 4 projects in state of Maharashtra, 2 projects in Andhra Pradesh, 1 in Gujarat, and 3 projects in state of Madhya Pradesh. So by FY 2030, we are expecting that at least 5,000 to 6,000 megawatt capacity can be commissioned by us, and in our own balance sheet as well as in joint venture mode. So,
Okay, but
the capital cost is estimated in the range of 7 to 8 crore per megawatt.
7 to 8 crore. All right. I'm just looking at your total capex cost, sir. I think per year you'll be spending what, around 9,000 crores?
Yes, you are right, please.
Yeah, 9,000 crores. Your current cash flow, I'll estimate it around 4,500 to 5,000 crores. The cash flows from operations that you're generating. Now, even post the commissioning of Parvati as well as Subansiri, which you told us, the number goes up to say around 7.5 to 7.8 thousand crores. But
Yes,
9,000 crores is what you're looking at to spending capex. And your cash flows will be 7,500 to 7,000. So there's still a gap of around 1,200 crores. Explain this to me.
We have to understand the CRC regulations. As per CRC regulations, we have to fund the project in the ratio of 70-30, 70 from debt and 30 from equity. So for the capex of 9,000 crore, we have to incur from our own only 30%, say 2,700 crore. So we are very much compatible from cash flow point of view, and we will maintain our dividend policy also.
Is there a possibility of you reducing this, 70-30 ratio, or getting it reduced so that your balance sheet also, becomes less debt heavy if all your capex is funded in the ratio of 70-30? Is there a case for that to come down, say 60-40 or 50-50 at some point?
Yes. Generally, we do not keep the case idle. We first incur the capex from our own, and thereafter we recoup the by raising debt. So we are very much compatible from debt equity ratio point of view. It is only 0.8 as of now, and it will not beyond 1 even after incurring the capex of 1 lakh crore in next 9 to 10 years.
All right, and final question then, just reiterate this, your regulated equity of 28,000, that target by FY 27 with nearly 18 to 19,000 crore of revenue stays, right?
Yes, you are right.
And 22,000?
Yes, our regulated equity will be to the tune of 28,000 crore. You can say almost double from the present level, and our revenue also will be in the same range, say 18,000 to 19,000 crore annually.
And 22,000 megawatt capacity by FY 32 stays as well, right?
Yes, you are right.
All right.
Okay, Mr. Goyal, always good speaking to you. Thanks so much for joining in. Wishing you all the best with regard to your capex plans, the expansion plans as well. We look forward to having a chat with you shortly. Well, and just take a look at the stock. It's up close to around 5%. Or clearly, the street likes the management commentary. For the time being, though, we'll slip into a short break. On the other side, we'll focus on Quest Corp. Remember, they announced a big demerger over this weekend. Mr. Ajit Isaac is waiting for us.